Reminder, guys, September 5th, 2019. It's Thursday. Got some crazy, wild stuff going on. So here it is. Let's talk again. It's supposed to equate to 300 points for saying hello. Seriously? I mean, this is just getting a bit outrageous and out of control, but nonetheless, it is happening. So there's a couple of ways to look at it. One way is the market is determined to push itself back to the 3025 level, or this is the greatest opportunity and we are looking to take advantage of it. We are looking to actually short this at hello. So 2931 is broken on 6th attempt. However, last time it broke that level, it didn't stay there very long. It actually got to a level of 2944 and pretty much immediately surrendered the gains this day. We can have a very similar situation today. Now, couple of other drivers that not many people are paying attention to. Oil is rebounding, which gives us the probability of more sustainable positive market today. So oil is officially, the time I'm recording this, at 55.75. And by the way, if you are trying to pull up the same thing that I'm looking at, it's /CLF20 is what we keep track of as far as the oil futures if you are in TD Ameritrade. Now, dollar pulls back slightly, just a tiny little bit, but it is overall a positive for the market. So the question of the day, is it just a simple overshoot that is going to surrender the gains, or is it a real move to the 3025 level, which ultimately represents the holy grail of all shorting opportunities? A couple of stocks we're looking, Sienna, not Workday, but PANW, BKNG, and Election. So I want to short you at hello, basically is what I'd like to do. Once the market hits 2971 to 2971.5, I'd like to start stepping into the put positions. Ideally, if we see a weakness around 10:30 a.m. But if it breaks above 2978, then we would cut those positions. So there's about 7 points worth of room there. If we do break above 2978, it does clear the path of sustainability over the course of the next 3, 4, 5, maybe 10 days to actually get to that 3025 level. Now, don't expect that the market continuously is going to move higher. I do believe people are going to be coming in and taking profits here today, especially in the second half of the day. So if that does happen, however, if we get a break above 2978, it makes sense to just cut all the puts and re-enter the position at 3015, 3025 levels once we see some signs of exhaustion once the market gets there. So here are how we coming up with these levels. It's pretty nice and simple. Last time we were here, we didn't stay here very long, and we can have a similar situation like this here. Market is moving higher on this news. I mean, the market is desperate. It is desperate to move higher because typically on a news like that, like, you know, hey, we're going to talk again in October. What are they going to do for the next 2 months? Why aren't they talking right now? This is just a bunch of bullshit. Doesn't make sense, but I think this is why this is such a great opportunity to short the market on this "let's talk again" headline. It's just like, you know, boyfriend and girlfriend. They keep breaking up. They decide to talk. They keep sending messages to each other. It's just there's nothing healthy or stable in this relationship whatsoever, and that typically doesn't end well. So the bigger drop is in the making, but these higher levels do present, in our view, a much better opportunity to enter on the put side. So last couple of videos we did mention to trade small positions, guys. So when we mention entering into positions today, trade small until they get clear sign of a reversal. We get a clear sign that the market does want to break above that 2978 level. With that said, not everything is rosy as it seems. So even though the key thing that we've been struggling with lately as far as in the chart, the mixed signal, was this MACD, because it kept playing around this orange line, intersecting it in a bullish move, then it went back intersecting into the bearish move, and now it's clearly in the bullish mode as far as the daily chart. But not to neglect the fact that it's still highly bearish when we look at the weekly chart, and the weekly chart is still in the death cross formation. On the weekly chart, guys, on S&P futures, you can clearly see that the market is moving higher on the lowest volume we have ever seen. This is unbelievable. So typically this is not going to last, but it unfortunately cannot prevent the market from moving temporarily higher. So if we get back to this level, clearly the RSI is going to be nowhere these previous levels. And so RSI is going to continue creating this downtrend. It's going to be, this is why I'm referring to it as the greatest shorting opportunity of all times right over here, guys. So with that said, moving forward, as far as the trading tunnel, right? So we are officially above the yellow line. So on the 6th attempt, the market does finally appear to take out that 29.31 level, but things do look questionable here. In a way, it is looking like a move 7 pre-market, and we did get a move 7 yesterday, so in a way it's a bullish continuation where institutions are buying the dips. The question is, they have not been very consistent with it, so every couple of days when we get buying the dip behavior, it is typically reversed and followed by shorting the bounce behavior in institutional activity. So we cannot take anything seriously in the market right now, guys. That's why trading smaller size position makes sense. And if you're really trying to nail this, I would seriously wait to see if the market is going to try to work its way higher all the way to the 3,025 in order to determine an ideal entry on the put side. The reason why we don't want to go bullish here is because the market could easily move another 5-10 points, reverse, and that's not going to be profitable either. So it's a tricky circumstance. That's why just focus on trading smaller size positions, protect your capital so you could strike when it really matters. With that said, PANW, I always get these things confused, guys. I don't know, I keep, you know, because they're similar stocks. They trade about the same level, 200 bucks, and they trade very similarly. So Workday and PANW. So none the case, we got a situation where yesterday after they announced PNW drops like a rock, and typically would stay there because they actually announced an acquisition of another company that's highly negative. Typically, if you look at all the cases throughout trading, 90% of the cases when the company is making an acquisition, the stock should tank. So for that reason, we expect some sellers to come in. It did rebound once the conference call kicked in, but the most interesting observation about these PANW trade, guys, is this. Despite of all these bullish activity, we've got about, out of 9 analysts, we've got 8 analysts that are putting a buy rating on the stock, but they're cutting the price target. So it's like actually giving a sell rating to the stock. We only got 1 analyst out there that is actually raising the price target. So price targets range right now on this thing anywhere from 190 to 300 bucks, average being about 240, 250 level. But these 240, 250 overall targets were slashed from like 270, 280 level on the way lower. So typically that is a negative thing. That's what we expect between the acquisition news plus all the analysts, even though they're like, we still like it, but not as much because we're going to slash the target price on these things. We're expecting a sell-off. Now, the meaningful part of the sell-off here is watch out for this 215 and the 212 area. If that area is broken, we can actually reverse back to the 200, so it could be a very highly profitable trade right here. Overall, on the weekly, guys, this is what we're seeing. And again, the most important thing when you guys look at charts is to look at the multiple time frames. So the weekly time frame shows diversity on the RSI. It's got these head and shoulder pattern development. It's got the def hook development. It's got the def cross going on in the MACD. So we got a ton of super bearish things. That's why we actually made the suggestion yesterday to short the hell out of this thing and even keep some things overnight. So something was said, or maybe just an institutional investor just trying to maintain the stock before they unload a bunch of shares. So the trade actually looks very, very interesting this morning. We certainly want to take advantage of it. So we'll look at the daily chart. We've got same thing developing here. We've got head and shoulders. So we get 2 head and shoulders on multiple time frames. Guys, that's a definite bearish sign. You got a def cross going on here. You got another def cross going on here. Okay? And still repetition of the divergence on the RSI and all that other stuff here. But this level we're trading right now, 220, you see it doesn't have a whole lot of room. Last time it tried to close this gap, it failed and it dropped. I think if it moves to 222 level, this would be a perfect entry on the put side and expected to revisit this 200 level. So target 1, 212. You see why 212 is so important, because if it breaks below 212, this def cross is going to continue forming, creating a significantly lower move in the stock. And you see the history of it, right? On occasion, it does these crazy moves higher like this one. And then look, it's followed by 1, 2, 3, 4 days lower, like substantially lower days. It's got a history of making these big white candles higher. Look at this one right here, right? It moves higher and then 1, 2, 3, 4, 5, 6 days lower. So I think that's what we're going to get today. Big white candle higher followed by multiple red candles lower from there. So very interesting trade. Here's another trade that looks interesting this morning, guys, is Sienna. Sienna, after the conference call pre-market, started dropping like a rock. So total reversal, total trend reversal opportunity on this one, guys, from 45 to 38. But we think the stock could actually fall all the way to a 32 level after possibly breaking this 37. So keep an eye on Sienna. On any bounce by 40 level strike puts, that would be ideal. If it breaks below 37, it can actually go all the way to the 32 level. That's where the next level of support is. So it could be a highly lucrative trade right here, considering it's got bearish MACD, bearish accumulation distribution. So lots of interesting things in that trade as well, guys. September 4th, yesterday was a move 7. That was the lowest probability move we had, but it did take place. So overall, this is how move 7 looks. It looks like it's reversing to a move 2, but they buy the dip. It bounces high. It looks like it's reversing again. They buy the dip again. Overall, it opens higher, finishes higher for the day. 2-day sequence is 2-7. It's supposed to say 2-7 right there, guys. So 2-7 basically looks like they are shorting the tops, but then we gap up and they're buying the dips. So buying the dip could actually continue for another day or two. 5-day sequence 8-7, 2-3-7. 8-7, 2-3-7. What's interesting about this sequence, guys, is we're actually getting 2 gap ups on 2 consecutive days. So typically on the 3rd day, like tomorrow, we can actually go into a situation that would be called an exhaustion gap. So if you see a particular gap, let's say you're adding some puts today once we hit these levels of 29.71, and the stock makes another gap up higher tomorrow, maybe in the 28.80s, 28.90s. It has a highest probability of reversal on day 3 of moving higher after making a series of these gap ups day to day to day. So the 3rd day could be tomorrow. Now again, the probability of the 3rd gap up higher is not great. It doesn't happen very often, but if it does happen, it presents the best opportunity to short. Today we're expecting to move 11, 7, or 1. Overall, we're expecting the bullishness to continue throughout the day, but we are not expecting the markets to close by the end of the day at the highest points where they've opened. So yesterday the VIX made another downward day, but still overall it is above 16. It's moving sideways. We do believe it is possible for the VIX to revisit this 15.8 level from a couple of weeks ago, but as it did last time, it is destined to bounce from those levels. I don't think it's going to give up that 16 level easily. So key takeaways for today, guys. Begin to short the hello, let's talk story today around 10:30. Reevaluate that move if 29.78 is broken. Do not trade big until we get to 3,025. Because that could represent a much better entry. Expect profit taking to come in between 2 and 4 p.m. Therefore, it could be ideal to first steer step into position about 10:30, enter the position right before 2 o'clock in the expectation of a sell-off going into the end of the day. Got a ton of trades going on tomorrow, guys. Don't trade heavy. Trade light. Get ready for a huge day tomorrow. I'll catch you on the next trade soon.